Hey, it's Mark. I'm going to look at some commodities here. There hasn't really been a lot of good stuff going on with tech, so I've kind of been focusing more on short setups and just specific stocks and commodities and gold for the long side. So yeah, I'm definitely still long biased on gold and even energy names. There's some good charts in the energy sector like BTE. I bought some calls on that one the other day, and this one came out of a really nice base here, nice trading range. Like I was saying, it found support back, around $3. So I already talked about this one in another video, but it's worth mentioning because the technicals are still really good, and it's breaking out of that trading range. You can see in the past when it got up to these levels, it continued a little bit. So, if energy continues, it looks like there's some good relative strength there with this one. But the main thing I want to talk about today was these gold stocks, because the gold futures are just still ripping, and it looks like the money even opened up the gap up again. So I did a watch list of my favorite gold stocks based on momentum the other week. I think it seemed like forever ago, but I guess it wasn't really that long ago. But I put together a little watch list for the people on my Twitter. So if you don't follow my Twitter, I recommend just follow me on Twitter, because I put out a bunch of charts and setups on there, long and short bias. So I'm just trying to pull up my watch list. Right, I did a Twitter post on all these stocks. Yeah, it looks like I'm trying to find a post here. There's so much stuff in my feed here, but the stocks were Fury was one of them, the gold stocks, and I put up that post like weeks ago, or it seemed like weeks ago, and it was right when GAU had that perfect triangle. So I've kind of been thinking about my own trading, and like a lot of times I'll put on stuff that's sort of more speculative and not really a setup that I like based on the chart. So there's plenty of opportunities for the stuff I trade with the setups based on the short side and the long side. So I'm just gonna stick with the triangles and really clean bull flags, because over the years I can tell when a bull flag or a triangle is top choice, a good enough one to be greater than 50% chance of following through on the setup. So that's kind of what I've kind of been thinking about that, and because I do play a lot of speculative stuff, like based on momentum, or news or something, like the Tesla was one the other day. But it's I think I'm just gonna really try to just focus down on these triangles and bull flags for the longs, and on the shorts, just 52-week lows or coming off of like a descending triangle, or supernova, or a supernova, So that's where my expectancy is. So over time my positive expectancies in those setups pretty much, and like I can share that because it's not like people don't know about triangles or bull flags, so it's not like I'm giving away my edge or anything. Because it's one thing to even have setups, you have to trade them right and stuff. So you can't stop out too early or stop out too late, or position management and stuff. So it's not like I'm the world's best trader or anything too. So it's not like I'm giving away these, but these are good setups, and so maybe if you're new and you need a setup to watch, like the GAU is the one I put on my Twitter account. Yeah, it was back in early March, because I found this triangle right here, and it's just a perfect triangle, really, because you had, you know, a nice run day, and then, you know, when it consolidated, it formed a perfect little triangle there, and then it even printed a hammer off the top there, off the run. So the momentum was there, and it actually didn't really follow through. Like it's taken weeks now for it to start following through, but so that one technically really didn't even work out the way I thought it was going, because I thought I was gonna start running, you know, immediately after that, but yeah, it's finally starting to get some follow through now. And the other one was Fury, and Fury, I just seen like in the past that it has a lot of spike days. Excuse me, and it did like a really long bull flag there, and then it's got some trend support there now. So this one just went today. Really didn't really do much, you know, since I found it, but it's finally starting to move now, and some pretty good volume. You know, we'll see what it does at these. It's got a lot of resistance up here, like 55 cents. So really keep an eye on that. But I did buy the GAU. I bought some calls on this one, like when I found it originally, and I held on to them, and they're doing pretty good now. But they did have a perfect triangle, really, and it's a shame it didn't go immediately, but you know, that's what the market does sometimes. And the other one was HMY. And actually, I found this one like in February, I think, actually. I was looking at it. And, but that first spike in March was pretty nice, and it's been a huge runner since. But I didn't trade this one, but that was on my watch list too. And that I put out in early March for these gold stocks. And the other one was KGC. And this one's been really good actually since I alerted it, because I found it, you know, back here in early March, and it actually did a triangle too. Pretty nice one there too. Had a little triangle. So yeah, that one's a good one too. And they've been kind of, you know, they haven't really gotten a lot of momentum until recently, some of these names. So, yeah, a lot of these that I have on my watch list are looking good now, like ASM. This ASM has been really moving. EGO has been like super steady. EGO, when I put these watch lists together, I always try to put the ones on that I know that have run in the past, so they're former runners, and those tend to be, you know, the smart thing to try to trade, you know, because they have a history of market makers moving them. So yeah, I still like the GAU and the KGC too, really. KGC's got a really nice chart because it came out of that trading range and just made a new high. Looks like a 52-week probably. Yeah, 52-week high. So, and that one sounds familiar. Yeah, I know that one from the past too. It used to run back in the day, it probably went in the old commodities boom in 2009 to 2012 or so. Yeah, I'm kind of curious. I'll test my knowledge here, my hunch on these. Yeah, it wasn't actually a good one then, but must have been later. Yeah, 2016 it was crazy, and 2016 it went up from $1 to $5. So it did it again almost pretty much in 2019-20. So yeah, it can easily keep going because it can be a good runner. So yeah, that's it for gold really that I've been paying attention to. I was just looking at the futures. It's just pretty crazy right now. The gold futures here are up a lot again. I wonder if this is today's open. Looks like, yeah, it's showing the 4th. Yeah, it's a huge gap up. It's like pretty crazy. These gap ups are pretty strong. Like I've said in the past, a runaway gap chart is one of the most bullish charts you can find. You know, these gap ups when they're consecutive. You know, gap up after gap up. That's a runaway gap pattern, and they can just keep going and going, especially in commodities. You know, commodities overall trying to trade the best on technicals, and yeah, runaway gap in a commodity is the most bullish charts you can see. It works the downside too. So if the stock's making lows, new lows and a runaway gap, it's the same. But yes, I'm kind of surprised really by the gold move. Like, I was thinking, I remember with some years it seemed to be like a fear trade, but it's usually just like, it really is just kind of like an inflation hedge almost, like after there's a lot of money printing or the rates are really low. Like in the early 2000s, gold had a huge run recently. And of course, everybody knows the 70s. But the 2000s run was really, really huge for gold. And that was when Alan Greenspan, the Fed chairman, had rates really low for a long time. You could argue too low, maybe, because that's how you got some of the bubbles. But the rates were really low in 2000s, and gold and commodities were really good. Even ag, in the 2000s, with the rates so low. But now you got rates high, so it's kind of doesn't make sense, but like I was kind of thinking, I saw somebody post on Twitter about, we may be entering like what they called the everything bubble, where there can be, appreciation in every asset class, commodities, Bitcoin, cryptocurrencies, stock market, bonds, there's not a lot of precedent, but usually when there's like a risk on environment, everything can be risk on. So the money could go into everything theoretically, I guess. In theory, if there's a lot of productivity and economic gains, GDP, and there's excess money, excess savings, and it can all go into anything really. So if they're chasing alpha, so that's kind of one of the things. Because I think about stuff like that a lot. What the next like 10, 20 years is going to be like, and if AI does come through to the expectations, it's gonna be a huge drive like the internet was back in the 90s, and we saw what that did for stocks and risk on assets back in the 90s. So it was one of the best. The 1980 to 2000 stock market run in the United States was one of the best ever. I think it's actually the best ever. So, and that was in part due to personal computers and the internet technology boosting productivity, and I don't see why it would be any different this time if these AI assistants can almost do as good a job on a lot of things as the average worker, but of course their goal is to have it replace workers. But even in the meantime, if it's a productivity gain, it's a productivity gain, right? So that's kind of what I've been thinking about a lot, and what it'll look like 5 years from now or 10 years. So there could be, you can see Bitcoin go up, you could see crypto up again, and you can see we're seeing commodities up, and we're seeing stock markets up, like even Japan, and I don't see why that would be any different if there's even an improved economic activity out there. So anyway, the rest, like, tech is pretty boring now, and I think we're just going to go sideways. Like tech is setting up to go sideways for a while, if not down, at least for a while, for the meantime. And that's pretty much all I've been looking at is like I hedged my crypto. Like I have a decent portfolio of crypto, and I put on a hedge with the biddy calls. So it's the inverse Bitcoin, basically short Bitcoin. So I put these on the other day when the momentum stopped a little bit, but I still think Bitcoin's going to go. And you look at the like the base case, the cases, it's basically it's like a power law, and it's like if you look at like the log chart, it's like it makes the stock market look like inconsistent, or the gains over the long term, because in the long run we know the stock market is always up, right, over decades and decades. But Bitcoin does have a track record, over it's like 16 years now, or 2008 was when it started. So it's got over a decade of performance, and it's incredible if you look at the chart. Like I was gonna post, I might put a link on my Twitter to this guy I follow. He basically looks at all the math on it, and just to really analyze the chart and the even the variance. Like 'cause if you smooth out the variance, it's pretty insane. Like, but yeah, it's like the return's better than any other asset ever. I can't remember the exact figure on the total return, but it's pretty incredible, and it just seems to continue. It just keeps continuing. It's not necessarily a risk off, or a risk on. It's not just risk on. It's not just. It doesn't just go up when the market goes up all the time. Like so yeah, it could it could have a lot more upside in Bitcoin. But yeah, that's about it. So yeah, I just want to talk about these gold stocks because they're still looking pretty good. There's still a lot of momentum. Like oil is still doing the same thing. Looks like it's like breakout gaps every time. So let's look at the futures and see. Yeah, it's just still got a lot of momentum, and it's pretty bad for the it's bad for the Fed and the economy. But if oil goes up, but looks like that's what it's going to do for a while. But the thing, with the rates, like these high rates, they don't help the small banks. So the small banks are been taking the brunt of it, and that's why you look at the financials. They're all the large cap financials are doing great, and the small cap banks are doing pretty mediocre. Or, a lot of there's like trouble spots. So I do have some NYCB puts and VLY. And the NYCB had a good day, so I put on the puts because it had a good day today, or was it yesterday? And yeah, I think it was today I actually put them on because they're actually green, so the options are gonna be a little cheaper. But I'm looking at, I think the NYCB, if the trend continues, because it's in a downtrend now, so if this downtrend continues, it could test the lows again. It's like $1.70. So yeah, it could be a month or two. And the VLY, it's the same. They've got earnings coming up, so it's kind of a speculative play on the trend with some of these banks with CRE exposure. Yeah, so that's my play on that one with the puts. So yeah, that's what the best one I could find really that has options, and that I know from the past it's been under pressure when there's it could be under pressure when if there's a bad quarter. So yeah, that's it. That's all I want to talk about. So thanks for watching, and I'll catch you later.